Hello traders and welcome to the lesson 6 for this trading webinar series. So for today we are going to talk about support, resistance, as well as trend lines, channels, and we will incorporate all of the things that we learned so far from our previous webinar. So we learned the importance and how to use the Fibonacci retracement and extension, as well as the Andrews pitchfork. We also learned the way on how to look for support and resistance zones as well as trend lines. So for today, before trying to talk about the Elliott wave next week, let's just put all the things that we learned together so far so that once we go deeper on our technical analysis webinar series, we have the strong foundational knowledge to incorporate the trading and the strategies that we learned so far for us to have a profitable strategy. Okay, so before we begin, I would like to invite everyone again to please be with us and join us on our Telegram channel. So you may find the link on the description below. And I would also like to invite you once again to be with us up to last Friday next week. So this session that we have today is the sixth webinar, and we only have three webinars left, two webinars after this. And on February 17, which is on next Friday, it will be our last session. And after the webinar, once again, you will have the training certificate coming from the OctaFX team. You will also have the 100% bonus. And then you still have three chances left to win the $100 deposit bonus on your live trading account. And as of course, you will, we are pretty sure that you will have a strong foundational knowledge for you to be able to trade profitably after this webinar. So far, once again, just like at what I am saying earlier, we learned how to read structure, how to use Fibonacci retracement, as well as how to look for important zones in the chart. So hopefully we are able to uh, bring value to you so far. And once again, I am also encouraging you to be part of this from this special promo from the OctaFX team. So 5 individuals will have a chance to win the Samsung Galaxy Watch. 5 individuals will also have a chance to win the iPhone 14 Pro. 5 individuals will win the MacBook Air 25 for merch pack. 5 individuals will have a chance to win the $3,000, which is a huge boost on our capital, and as well as the Sony headphones. Okay, so we will again start with the draw, and we have 28 right answers from our previous webinar. So you may find your name together with your number on the description box below. Okay, so let's wait for 2 minutes before starting the raffle. So hello to Home Sweet Home, nice to see you again. Hello to Leonito Loma. Hello to Josephine Antonio, good evening to you as well. Hello to you as well, Brian Dison. Welcome to our webinar. Hello, Dodong the Piton, nice to see you again, sir. Good evening to you as well, Reyver Rom Montoya. Hello to you as well, Shailendra at 99. I'm fine, thank you for asking. How about you? Good evening to you as well, Sir Roberto Alganyon. I'm fine, Abid Class Ra. Thank you for asking. How about you? Good evening to you as well, Sir Kuripotakmoto. Good evening, God's time. Nice to see you again. Good evening to you as well, Andy Buesa. Good evening to you as well, Kev Martinez. Hello, I am Abik. And good afternoon to you too, Dayo Sheoye. So good morning, good afternoon, good evening from wherever you are watching today. Okay, so let's start with the draw. So again, we have 28 right answers. So let's start. Okay, so 5, 4, 3, 2, 1. So there you go. The winner is number 10, and number 10 is Jp Ramos. So congratulations, Jp Ramos. You won the $100 deposit on your live trading account. So again, please keep in touch and our team will reach out to you. So once again, congratulations. Okay, so let's start with our session for today. So again, what we are going to talk about is support and resistance lines as well as trend lines. So I know that we already tackled these topics before, but what we are going to talk about today is how to incorporate these things, this strategy on the previous lessons that we have, which is the Fibonacci retracement and extension, as well as the pitchfork, the Andrews pitchfork. Okay, so to begin with that, first let's define first the support and resistance. So support is often viewed as a floor, which is supporting or holding up prices, while resistance is a price level where rising prices stop, change direction, and begin to fall. Okay, so once again, if we are going to look on the chart, if we have a 1, 2, 3 pattern, we know that this previous one right here, or this previous resistance, will be our most important level. The previous level that which has been broken is our most important level for the price to pull back before trying to look for a buying opportunity, right? But always remember that when trading the support and resistance levels, always look at the previous low that we have right here, the first higher low, which is our previous two, because as long as the price is above it, so let's just remove this one for now. So as long as the price is above this previous low, and at the same time, as well as the price is below our previous high, then this is still considered as an uptrend. But if the price breaks this previous low, then the uptrend is losing its steam and we shouldn't look for a buying opportunity anymore. Okay, because be a victim of uh we might be a victim of the thing or the trend, the trend change or the reversal in trend. Okay, so what we should do again is to look for a selling opportunity once we saw that the price is breaking this previous low that we have right here. But as long as the price is above it, even if the price created a structure like this, so let's say the price created a move like this, we are still on an uptrend. As long as the price keeps above this previous low, we are considered on an uptrend still. And on identifying support and resistance, it is important to look for the important zones, important levels. So this previous one right here is our first support, which is the most important level on the chart. And then this previous level that we have down here, which is R2 wave, is the support that keeps the uptrend intact. Okay, but right, let's say that we saw a structure like this. So is this considered a resistance? While the lows right here, do you think that these levels are considered support? So to answer that question, yes, they are still support and resistance, but they are not the major support and resistance that we should look into the chart. So this support and resistance levels right here is what we call the minor support and resistance levels. Okay, so those were the important thing to remember when looking at the chart, because other traders, especially the beginners, once they saw that the price is creating a move like this, they will start thinking that the price is creating a new lower high, and it is creating a series of lower lows down here, without considering that the trend is still up, because we are still above this previous low. So keep in mind that as long as we are above this previous two or this previous low, then we can still expect for the price to continue in its original direction, which is to go up. Okay? So why we are discussing this is because we are going to incorporate it with the multi-time frame analysis as well as the Fibonacci retracement and extension. Okay, and there are also traders who wants to take a sell trade while the price is going down like this. So if the market structures like this, we know that this is an uptrend, right? But there are some traders who are looking to ride this mean reversion, which is the pullback. They are trying to ride this move to the downside. So if you want to be like that, if you want to trade like those traders, that's fine. That's a doable strategy as well. But keep in mind that the long-term trend is still uptrend, and we might see a pullback into the support. And then if you, let's say you have a short position right here, then the price went down up to this level. Once the price reached the support, keep in mind that this support level might be the start of a new move to the upside. So if you have a short position right here, you should consider taking your profit once the price reach the support zone that we have coming from our previous one. Okay? So if we take a look at the live example, so here for the Aussie Canada, this one is a good example. So as we can see, we have a 1, 2, 3 pattern here. Then as we can see, the price breach our previous one right here. Instead of pulling back into this level before continuing to go up, the price breached our support, and then it went down up to this zone. So if you remember our lesson from the Fibonacci retracement, we know that there's a tendency for the price to respect the Fibonacci retracement that we can see right here. And true enough, we can see that the price reacted into this level. And this is what we are discussing earlier. So we are still above these previous two, right? We are still above the low, the previous higher low, while the price is creating a structure like this. So if you are thinking that the price will go on a downtrend right now, so keep in mind that we are still on an uptrend as long as the price is still above this previous low. Okay? But once the price breach this level, then we can consider taking selling or taking a sell or looking for a selling opportunity. All right. So if we are going to take a trade on this move, so just like what I said earlier, other traders are taking an opportunity to take a sell trade while the price is going down like this. They are trying to ride the mean reversion. They are trying to ride the pullback while the price is going down. So what they normally do is they are going down on their lower time frame for their entry. So once again, what we did here is to identify the 1, 2, 3 pattern. And after that, we saw that the price breached this previous high, which is our previous one. So because of that, we pulled up our Fibonacci retracement, and we can see that this Fibonacci golden zone is lying right here. And then if that's the case, so let's say we are just right here. We are just right here. So if the price started to make a reaction like this, then again the other traders will try to ride the pullback until the price reach a support zone. And also keep in mind that we also have a previous structure here, which is a previous support. And as you can see, the price respected this previous support and it became resistance. And this is the start of this mean reversion or this pullback. Once the price reached this level, this is where the price reacted. And this is where the price started the pullback. Okay, so let's say we are just right here. From now, we don't know what happened yet. And we saw that the price reach this previous support. So we know that a previous support may act as a resistance, right? Based on our previous webinar, we know that the previous resistance may act as a support and the previous support may act as a resistance. So once the price reach this level, so other traders, again, they will try to ride this pullback on their lower time frame. And then what they will normally do is to look for a selling opportunity once the price again reach this resistance that we have on the 1 hour chart. Okay, so as we can see on the 5-minute time frame, this impulsive move on the 1 hour chart. So this impulsive move on the 1 hour chart, as we can see, it only has a one leg right like this, right? But on the 5-minute time frame, so this is the beauty of multi-time frame analysis, because we can see that on the 5-minute time frame, we have a lot of buying opportunities starting from this bottom. As we can see, we have a lot of 1, 2, 3 patterns like this. So imagine if you took a buy trade. So let's say you saw this. Let's say you saw this 1, 2, 3 pattern before. If you saw that the price is creating a 1, 2, 3 pattern here, then if you had a chance to took a buy trade here, you will have the chance to ride this momentum to the upside, which is the impulsive move. And on the 5-minute time frame, again, we can see that we have a lot of buying opportunities, which is right here. Then keep in mind that this previous support may act as a resistance. And again, other traders will try to ride this pullback and they will try to sell until the price reach uh, an important support level that can be found on the 1 hour time frame, which is our time frame analysis. So let's say we are trying to take our profit once the price pull back into our previous resistance, which is our previous one. Okay, so imagine if you caught the sell trade right here. So let's say that we are just right here, then we can see that the price already reach our resistance. So later we will talk about how to combine horizontal levels and trend lines. Okay, so we can see that the price started to move down after reaching this resistance and the price. This is this green zone right here is our support or our previous one on the 1 hour time frame, right? Then as we can see, let's say if you took a sell trade here at the top of the resistance, then after seeing that the price reached the support, you may now start closing your trade to bank in your profit. But if you are following the trend, so let's say you want to see a breakup structure before looking to unload your position, or you are first trying to look for an entry candlestick pattern that would cause a move to the upside before taking your profit, then you will likely close your position with this pin bar right here. So imagine if you close your position once you saw this pin bar, then you will have a huge risk to reward ratio which is 1 is to 3. So that's a good trade right there. So later we will discuss about a strategy on how to ride this pullback on this lower time frame using horizontal level as well as trend lines. And we will also use our Fibonacci retracement and extension to see or to look for a possible targets. Okay. So let's say you don't want closing your position if you saw an entry candlestick pattern. What you want is for the price to make a move to make a move like this, because this is a breakout of previous two, which is a sign that the price will reverse to the upside again, or will go back up. Then as we can see, we saw that a pattern appeared right here. The price breaks these previous two. So we can see that the price is creating another 1, 2, 3 pattern here. And if you, let's say you took a sell trade here, then you will likely close your position with this green candle that breaks this resistance. And with this trade, you will have a chance to have a risk to reward ratio which is 1 is to 2. Okay? So because this is hindsight, we know that the price went down further. But if we are trading this live, we will then likely be closing our profit once the price breaks this previous high right here. Okay? So now the question is, now that we know the importance of support and resistance levels, so by the way, support and resistance isn't just a single line, so we already discussed that. So again, for the benefit of those who didn't watch, or for the benefit of those who didn't have the opportunity to be with us from our previous webinars, support and resistance isn't a single line like this. We should consider looking into a zone like this instead of a single line. So to do that, what we can do is to look for multiple confluences. So for example, here on this previous data that we are looking, so this is our 1, 2, 3 pattern. Then if we are looking at a single line, then this will be our support, right? But because we want to look for a zone instead of a single line, what we can do is to look for multiple touches or multiple confluences. And as we can see, we have it right here. We can even zoom out the chart, and we can see that this support was tested multiple times before. And we can see that we have multiple touches right here. And because of that, this could be a good support zone for the price. Okay, so that's how we can draw a zone. And for resistance level, so we know that once the price broke this resistance, we know that there's a tendency for the price to reach another resistance before the pullback. And if we look on the left, we can see that this is the previous or the recent support. So we can put a line on this. And then if we look left, we can see that we also have confluence right here. So this could be our resistance zone. And if we draw a zone like this, so we can see that this is where the price reacted before creating this pullback. All right. So that's how we are looking for a structure and for a support and resistance levels and zones. So now that we know it, now the question is how to use angular support and resistance levels as well as trend lines and channels. So this approach is based on the idea that the angle at which the support or resistance level is drawn can provide additional information about the strength of the level and the likelihood of price action at that level. So angle are very important because, for example, we have an almost perfect market structure like this. So we can draw our angle like this, or the trend line, we can draw it like this. So let's say that we have multiple touches here. So by the way, if you have two touches on your trend line, then this is a valid trend line. But if you want to see a stronger trend line, then you must look for three touches. So this first, second, and third touches is considered a strong trend line. And if you are drawing trend line, avoid the market which has a move like this. So let's say we have a trend line right here, and then if we draw this trend line connecting into this next higher low, we can see that there's an invalid low or invalid trend line right here, right? Because if the trend line looks like this, then this is considered invalid, or this is not a good trend line. So what we need to consider is to look for a trend line which has a retest like this. Okay, so going back into the angular support and resistance. So again, if we have a market that has a structure like this, then all of a sudden, let's say that the price started to move like this. So we can see that here, the angle that we have right here is steep, right? It is a very good angle, but right here we can see that the angle is slowly sloping. So we can see that the angle is going like this, right? So we started a move like this, and then the price started to create a structure like this. So if the angle is showing you that it is doing such a move like this, then this isn't a healthy trend anymore. We should look for a reversal or a possible reversal for the trend. Okay, so the angular support and resistance, traders use trend lines to connect highs and lows. So like how just like how I showed you earlier, and then plot them at the specific angles. So that's the importance of angle. Okay, once the price started to make an angle like this, then this is not a healthy trend anymore. So this is the first thing that you need to consider if you are a trend trader. Okay, again, keep in mind that trend lines is only useful on trending markets. When there's no trend, then it is very difficult. It will be difficult for us traders to look for a trend line. Okay, and once the angle is starting to move like this, then we should pause a bit and stop looking for a buying opportunity. All right. Instead, we should look for a possible reversal. And if we look on the live chart, so here we can see that we have an almost perfect trend line right here. So we only have two touches. So this is a valid trend line, but if this low right here was able to touch this trend line, then this is a strong trend line. Then as we can see, after creating an almost perfect trend line, we can see that the angle of this trend line right now is slowly changing. So this is what we are talking about earlier. We can see that the price is starting to have an angle like this, right? So if this is the case, then we should consider pausing for a moment on looking for a buying opportunity in this market. So what we should do is to look for a possible reversal again by waiting for a breakout of this previous low, which is our previous two, because we can clearly see that this is a possible head and shoulder pattern. Okay, so once the price breaks this level, then we should start looking for a selling opportunity instead of a long trades. Okay, so now the question is how to incorporate those trend lines and channels as well as the angle on the strategy that we talked about on our previous webinars, right? So what we should do first is to look for, again, a trending market. Then once the price pull back, so again lower on our lower time frame, we will see a move like this. And then on the lower time frame, we also have a trend line. We also have a horizontal levels, which is like this. Okay. So if we look at the live examples, so let's try to change our chart to Euro Aussie. So for this one, so let's start on the uptrend. So let's try to look at a good example. So let's say we are just right here. Okay. So by the way, inside our Telegram channel, we made a poll if you are more comfortable on trading breakouts and pullbacks. And because maybe you are asking why we did that, it is because we are going to discuss both strategies today. So there's no right or wrong answer. If you are a breakout trader, then that's fine. But if you prefer trading pullback, then that's also fine. But in today's webinar, let's try to incorporate both strategy. Okay. So to begin, what we can see here is we have the pattern again, the 1, 2, 3 pattern. And then we can see that the price didn't respected this previous resistance that we have right here. Instead, the price breached it. And if this is the case, again, what we should do is to look for a pullback into our Fibonacci retracement. And we can see that the price really respected the golden zone, which is the 61.8 Fibonacci level. Okay. And if we look at the 5-minute time frame, which is our entry time frame, so let's see. Oh, sorry, the chart won't allow me to see previous candle. So let's try to look at other example. So let's try to change the chart. Sorry about that. So here on the euro dollar, so let's try this one. So we have a 1, 2, 3 pattern here. The price pulled back. Then as we can see, the price didn't quite reach this support. But let's see if we have an opportunity to look for a trade inside our entry time frame. Let's try to look at this level instead. So here we have this uptrend pattern. Then we saw that the price pulled back, and then the price pulled back on its previous resistance, which could turn into support right here. So let's say we are looking to take a buy entry right here. So if you are a pullback or a breakout trader, so what you want to see is for the price to create a change of structure or a breakout of its previous two or its previous high, right? Because we are on an uptrend. And the price on our entry time frame is making lower highs and lower lows like this, right? So if you are a breakout trader, what you should do is to look for a trend line first. So here we have a good example here. So if you are a breakout trader, what you can do is to look for a breakout once the price created a trend line after reaching the support. So the first thing to consider is the price must reach the support zone first. Then after reaching the support zone, so what we can do is to look for a possible breakout on the trend line like this. So once you saw that the price already retested this support zone on our higher time frame, then you can start drawing your trend line like this. And then once the price breaks it with this candle, so as we can see, the price breaks this previous or this trend line. We can also consider this level right here. So this is how we can incorporate both horizontal and trend lines, both horizontal lines and trend lines. Okay, so for the aggressive traders, they are buying instantly once they saw that the price was able to break this trend line, while other conservative traders may want to look for a breakout from its previous high like this, which is a change of character. Okay, so let's say you are an aggressive trader and you want to instantly buy with a breakout of this trend line. We can also see that this is a strong bullish candle. It engulfs these previous two red candles prior to it. But if you are a pullback trader, then you might want to see a breakout from this trend line together with this previous high. And then after that, you may want to look for a pullback. Okay, so the pullback might do a double bottom, or it might react on the Fibonacci level. So later we will discuss that. So let's say you bought into this candle and you put your stop loss just below this low. And then let's say you are just, or by the way, we can also use the Fibonacci retracement as a resistance target, or as a target. So here, as we can see, we have this. Let me just delete this first. We have this 1, 2, 3 pattern before. Okay. So what we could do is to look for a possible resistance using this Fibonacci retracement. As we can see, this is where the golden ratio is lying. So this is where we can put our target. Okay, so if we extend it, we can put our target right here, or let's say in the middle of our resistance. All right, so if you are a breakout trader, so you already bought this breakout of this trend line. Okay, and as we can see, we won with this trade, aiming for this Fibonacci retracement. But if you are a pullback trader, then you might want to look for a pullback before taking a buy trade. All right. So again, what we did here is to look for a pullback. So this is the pullback on the higher time frame. It is creating a 1, 2, 3 pattern on the lower time frame. And then once the price reach the support, we will draw the trend line. And after the price breaks this trend line, you have the chance to buy if you are a breakout trader. Okay, but if you are a pullback trader, then you will likely wait for the pullback, and the pullback might end. So let's say that the price now has reacted into this resistance. So as we can see, the price created this hammer, this inverted hammer. So this may be the start of a pullback. So if you are a pullback trader, then you should be ready on looking for a buying opportunity. Then as we can see, the price here, it is now starting to pull back. So what you can do is to look for a pullback. So by the way, the breakout traders may sell their position right here. Then as we can see, if you are a breakout trader, if you bought with the breakout of this trend line, then you already won with this trade. But if you are a pullback trader, then let's see if we can have an opportunity to buy, whether on this possible double bottom or a possible pullback on our Fibonacci level. So always remember that Fibonacci zone is the first support, but if the price didn't respected it, then we should look for a possible double bottom below here. Okay, so let's see if the price reach our support zone. So there, as we can see, the price is now pulling back, and then we can see that the price reach this Fibonacci zone. So remember, this is the 61.8 level. If we draw the Fibonacci retracement again, so we can see that this is where the 61.8 Fibonacci level is lying. And then as we can see, the price created this this candlestick pattern right here, which looks like a pin bar, or we can also call this a doji. So if you remember our lesson from our previous webinar, which is the candlestick patterns, then you might want to start looking to buy into this candle. So assuming that we bought right into this candle, so whether we won or lost with this trade, so that's part of trading. So let's say you will put your stop loss below this Fibonacci zone, which is your support. And then let's say you are aiming for, let's just say, a 1:1 risk to reward ratio. So here, this will be your take profit level for a 1:1 risk to reward ratio. Okay, so let's see if the price could reach our profit or our TP level. So there's, we can see the price is now starting to go up. So let's see if the price could reach this target that we put right here. So here, as you can see, the price started to move sideways. Then, as we can see, unfortunately, the price didn't reach our target. So this is a classic example of breakout and pullback trade. So if you are, again, if you are a pullback trader, then you will start looking to buy once you saw that the price is breaking this trend line. Okay, but if you are a pullback trader, then what you want to do first is to look for the price to break its previous high right here. Then after the price breaks this level, then you may start looking for a pullback. So in this example, we can see that unfortunately the pullback traders lose this trade, but the breakout traders won with it. All right. So let's try to look at the Aussie Canada for another example. So going back on this pair, we can see that again we have a 1, 2, 3 pattern here. The price pullback on our Fibonacci retracement. So we can draw a support zone right here. So assuming that we are just right here right now, we can also see that we are forming a retest from this trend line. So let's see if we have a possible entry on our lower time frame. Okay, so this is where the price pullback on the 1 hour chart. Then as we can see, the price, again, the first thing to consider is to look for the price to reach our support before trying to look for a trade. Okay, then as we can see right here, the price already retested the support, already reached the support. So it is now time to look for a possible breakout of the trend line. So let's see if the price could break the trend line. So there we can see that the price creating a 1, 2, 3 pattern like this. So we can connect our angle like this one. So let's see if the price could break this trend line. If you are a breakout trader, then you may start looking to buy once the price breaks this trend line. And as we can see, the price was able to break this trend line with this candle. So this one. So if you are a breakout trader, again, you will likely buy with this breakout. But if you are a pullback trader, you may want to look for a pullback or a breakout first from this horizontal line. Okay, so this is how we can combine horizontal and trend lines. So if you are a breakout trader, then you may start buying here. Then you can put your stop loss, let's say above the or below this previous low, this previous structure. Then as we can see, the price went up. It went up to this previous structure that we have right here. So as we can see, the price didn't even reach our previous support down here. So you should also consider the previous structure on the left of your chart before buying the breakout of the trend line, because this previous support might turn into resistance, right? So as you can see, the price, we can see that the price respected this resistance zone. Okay, so if you are a breakout trader, then you might want to look for a possible take profit order or level near this resistance zone. Okay, and then if you are a breakout trader or a pullback trader, then you may now start looking to buy the pullback once the price reach this resistance. Okay, so as we can see, the price is now pulling back. So again, what we can do is to look for the Fibonacci retracement or a possible double bottom that we have down here. So if you are or if you saw an entry candlestick pattern on the Fibonacci zone, which is right here, then that's a good opportunity to take a buy trade. And there as we can see, we have uh, a candlestick entry pattern right here, which retested the support. So let's say that we put a buy trade here and we put our stop loss below the zone. And as we can see, the price went up. So by the way, if you bought the breakout here, then if you put your stop loss down here, you should or you still won with this trade, because as we can see, the price went up to this level. But this isn't always the case. Sometimes losing is part of trading, and that is very normal. Again, going back to the pullback traders, so now that you have your stop loss in place, so what you can do is to look for this previous high, which could again turn into, or which could again act as a resistance, because this is the recent high that the price created. Okay, and it is also lying with this previous support right here. As you can see, if you are a pullback trader, then you won with this trade. And as we can see on our earlier example, the pullback traders lost while the breakout traders won. And that's very normal in trading. Okay, so let's say you suffered losing streak, 4 losing streak, 5 losing streak. Don't change your strategy. Always stick with your strategy, because if you are constantly changing your strategy, then that's not a good habit, and you might lose your trading account, and you might lose your confidence in trading, because let's say after winning 3 in a row, you are very happy, then after that you lose 4 straight. Then if you experience losing 4 straight, then you start trading a different strategy that you never even heard before, or you didn't even back tested, then you will lose your confidence on trading because of those habits. So that's a bad habit, and we should still consider trading our strategy even if we are on a drawdown. Okay. So there, as we can see, after the price reached our target, the price created another pullback right here. And as we can see, if we use our Fibonacci again, we can see that we have another retest on our Fibonacci golden zone, but this time we can see that the price didn't cooperate with our analysis, and it went down up to this level. And then the price created another opportunity for us. So here, as we can see, so remember, we are still inside our support. So if we go back on our 1 hour chart, this is where our support zone. So as we can see, we already won with the trade earlier. So this is where we won with this move. And as we can see, the price made another move to the upside right here, and we will probably see another opportunity for a buying trade. So as you can see, the price created another low right here. Then the price started to try to make another low. So if we draw a horizontal level right here, we can see that the price didn't breach it. Instead, the price created a double bottom, right? So if this is the case, this is also a great opportunity for the breakout traders to look for a breakout in this trend line. Okay? So remember that if the price action on your lower time frame is creating a price action which is likely to go up, then it's a great opportunity for you to look for a buying opportunity. So in this case, if you are a double bottom trader, then you might think buying on this pin bar. But if you are conservative, if you want to buy the breakout, then you will start or you may want to look to buy once the price breaks this trend line. So as we can see, the price breaks this trend line with this green candle. So if we bought here, we can see that or we can put our stop loss below this low. So let's say right here. And then to incorporate the horizontal level, we can put a horizontal line in this previous high. Then we can look above it and we can see that we have previous support down here which could act as a resistance or a target for our profit, for our take profit level. And if you are conservative, then you can go above it because we have another resistance right here. So let's see if we won with this trade. So again, for the breakout traders, you will likely buy with this green candle. And as we can see, the price went up to the second resistance, which is right here. But if you are a pullback trader, then you will likely wait for the pullback after the price breaks this horizontal line right here. So the price breaks it with this green candle, then the price reach this resistance that we drawn here. And as we can see, the price started to pull back after reaching this resistance. So if you are a pullback trader, then you should be trying to look for an opportunity to buy once the price reach either this previous high or our Fibonacci retracement. Okay, so in this case, we can see that the price reach our Fibonacci retracement here. So this could be our support. And as we can see, if we bought here, so let's say we buy this green candle, then we can put our stop loss just below the zone. And for our take profit level, we can again put it with this resistance that we have right here, or we can even adjust this one to this previous high that the price has created. So let's see if the price could reach our target. So there's we can see the price reach our target with this trade. So this is a great trade with both breakout and pullback trade. We both won with the same strategy. So imagine if you caught the breakout first right here. So if you caught the breakout and then if you won and then you again want to buy, if you want to buy again, then you will have another opportunity for the breakout or for the pullback, sorry. Then as we can see, we won another trade using that pullback strategy. Okay? And as we can see, we are already here right now. And just like what we said earlier, the price is now creating an angle which is likely to go down. Okay? So, if you are a day trader, you will you shouldn't look for a buying opportunity right now with this pair because it is creating an angle like this. You should now start thinking to look for a selling opportunity. Okay. And then before we end, I want to also include this to our lesson. So this isn't part of our lesson, but I want to include it still. So let's say we have this consolidation inside our previous low that we have right here and our recent resistance. So again, if we are seeing a move like this, so what we can do is to draw a range inside it, and this is what we call a Darvas box. Okay, so what we can do here is to look for a breakout either from the top of the box or below the box. And other traders also adding a 50% layer into their Darvas box strategy. So for example, the price started to make a move like this. So as we can see, we have this 50% Darvas box or this 50% range from our box. So other traders are putting a trend line from this major resistance down to the minor resistance. Then they will start buying once the price breaks it, while other traders will start buying once the price breaks this 50% Darvas box. Okay? And then as we can see, we have this green line right here, which could be or which could act as our target. And this is a good risk to reward ratio. So let's say we bought into this 50% Darvas box, we can put our stop loss, let's say below this minor resistance or support, minor support. And then we can put our target here. And if the price reach it, we can see that our risk to reward ratio is 1:2.53. Okay. So this is another way on how to look for a support and resistance level. Okay. So you may try to incorporate Darvas box on your trading system. And if you look on the live chart, let's try to look for a good example. So here, this is a good example. If we use a Darvas box right here, so we can see that the price pulled back into this previous resistance, which is our previous one. Then after that, the price created a minor resistance right here, which lying with the 50% Darvas box. So as we can see, this 50% Darvas box is acting as a resistance for this price. So what we can do again is to look for a buying opportunity if the price breaks this level. Then as we can see, the price breaks it with this green candle. And then we can clearly see that the price went up and it really reached our green line up here. Then after reaching the green line, this is where the price started to make another pullback. And then as we can see, if we bought here with this breakout, we can see that if we put our target up here, we have a 1:1.93 risk to reward ratio. Okay, so you can include Darvas box on your trading strategy. You may also want to use the thing that we learned today, which is the breakout trend line as well as the pullback inside our smaller time frame, which is which is our entry time frame. And then you have the opportunity now that you learn this strategy. You now have the opportunity to choose whether you want to trade the pullback or the breakout. So I suggest to backtest this strategy. And if you are more of a breakout trader, then you may start to backtest it. But if you are more of a pullback trader, then I suggest to backtest this as well. And again, going back on our earlier topic, what we first studied is the traders who are trying to ride this pullback or this mean reversion, right? So let's say after breaking this previous resistance or this previous resistance, we can see that the price created a doji right here. So if you are the type of trader that wants to ride this mean reversion, then you may start going down on your lower time frame. So let's see if the trading view will allow us. So there we can see. So we can see that the price is creating a different angle right here. So coming from this low up to this swing low, we have a steep trend line. So let's just draw it clearly. So let's say we draw it like this. So this is the angle that we want to see. But right after this trend line, we can see that the angle is starting to change after reaching this high. We can see that the price is creating a move like this, which starts the angle like this. So this may be the start of a new or the pullback on the higher time frame. So if you want to ride this move, so you may want to look for a selling opportunity. If you are a breakout trader, you may want to ride the breakout or to sell the breakout with this horizontal level. But if you are a pullback trader, then you may look for a retest from this low. Then as we can see, this previous resistance could act as a support. Then once again, based on what we learned, once the price reach the support, we may start looking to buy with our trend line breakout strategy. So if you bought here, then clearly we can see that this is unfortunately the price didn't cooperate with our analysis, but you got the point. Okay, so you may start looking to trade like that if you want to trade those structure on our lower time frame. Okay, so if you are being confused, so don't worry. We still have two more webinars after this, and you will still have a chance to ask something if you are being confused. Okay, so having said all of those things, we learned the support and resistance levels as well as the zones, the importance of it, how to use both of these support and resistance level inside our lower time frame. We also learned the angular support and resistance level, which is the if the price started to make an angle like this, then we should stop looking for a buying opportunity because it may start a new trend, which is down. We also learned how to combine both horizontal and trend lines inside our lower time frame. Okay, so having said all of those things, let's now move on our Q&A before I ask you my today's question. Okay, so if you have some question, you may now start asking on our chat box. Hello, Meu Yt Gaming. So we are very glad that you were able to use the Fibonacci retracement and you made some profits with it. So congratulations, as well as the head and shoulder pattern. So we're glad that you are learning so far. Hello, home sweet home. Yes, you may use it on any time frame. Hello, Faison Khan. Yes, you can trade as well on the 30-minute time frame. So if you want to trade on those time frames, I suggest looking at your analysis on the 4-hour time frame because 1 hour and 30-minute time frame are just looks the same. No worries, home sweet home. You are very much welcome. So like Meu Yt Gaming, anyone here who wants to share your trading so far? So Meu Yt Gaming said that he was able to profit with the Fibonacci retracement. Don't worry, God's time. You may still catch the replay of this webinar. You are very much welcome, Faisan Khan. Oh, congratulations, Home Sweet Home, making a profit after watching the webinar. So we're glad that we are bringing value to you. As well as God's time, he made a profit yesterday using the Fibonacci retracement. So congratulations to you as well. As well as Josephine Antonio, able to profit with the Fibonacci retracement. So congrats, traders. You're very much welcome. You too. And we are very happy that you are learning with us. You are learning from us. So, any question before I ask you my question for the day? So, by the way, if you are not seeing your name or your answers, even if you answered the question right, just wait for a few minutes because the server, maybe the YouTube server, is having some difficulties when we are sharing our answers at the same time. Is that true, God's time? How did you do it? Bulyok made profit as well. Congratulations. So even if you are trading on a demo account, be serious on your trading because that's how I started as well. I started trading on trading view on their demo for about 3 to 6 months before depositing my live account. And after learning, after backtesting and trying to trade on the demo account, then on my first month using my live account, I was able to make 5%. So that's the importance of being serious even if you are trading on your demo account. You are very much welcome, God's time. So again, if you are not part of the Telegram group yet, so I highly encourage you to join the channel. We are sharing some analysis there inside the group as well as the current events. Congrats, Josephine Antonio. So learning how to use the Fibonacci well or learning how to use it right is a very good improvement. Okay, so if you don't have any question, so let's now proceed with my question for today. Hello, Home Sweet Home. The Telegram link is on the description box below. So my question today is blank is often viewed as a floor which is supporting or holding up prices, while blank is a price level where rising prices stop, change direction, or and begin to fall. Again, blank is often viewed as a floor which is supporting or holding up prices, while blank is a price level where rising prices stop, change direction, and begin to fall. So you may now start answering together with your live trading account number. Don't forget to put your account number together with your answer. Hello, sir YJ007. You may see the link on the description box below about the Telegram group. So Miguel Villarubia, just put your answer on the live chat box together with your trading account number. Oh, Meu Yt Gaming. Sorry, I don't trade gold. I don't have any experience trading it. Hello, I am Abik. We will announce if we have a new webinar series after February 17. You may want to follow our social media pages. By the way, if you want to see more webinars like this with me, please consider liking this video, share it with your friends, and of course, subscribe on our YouTube channel. Hello, Home Sweet Home. I'm not sure, but the link on the description box below is English for the Telegram channel. Hello, American. What time frame would you like to analyze? Do you want to start on the daily time frame? Hello, I am Abik. Thank you so much for the compliment, and we are glad that we were able to bring value to you. I am also hoping that we will have more webinars in the future. So please keep in touch with us and follow us on our social media page for you to be able to be updated and notified once we have another webinar. Thank you for sharing your thoughts, Dodong Dapiton. You are very much welcome, John Michael Mendoza. Right, so that would be our session for today. So thank you for joining us once again for tuning in for today's session. So I hope to see you again on Wednesday for our next live trading webinar. All right, so once again, this is Paul Mendoza, your trading speaker. Bye. Today's session. See you again on Wednesday, our next live